You're with Kat Feeney on ABC Radio Brisbane and Queensland.
How much did you pay for petrol the last time you filled up at the Bowser? Have you seen servos where it's more than $2 a litre? Would you even pay $2 a litre? Well, you mightn't have a choice. If you need the fuel, you need the fuel. You might not be surprised to hear that fuel prices surged almost 7% over the last 3 months of 2021. But would you be surprised to hear the official statistics say prices overall have only risen by just over 1%? So what is going on? Is inflation about to run rampant? Is there anything you can do to protect yourself from rising prices? Phil McGann is the Director of Claritude Financial Planning here in Brisbane. Phil, good to have your company. Are we really paying more than ever for essentials, or does it just feel that way at the moment?
Good afternoon, Kat, and welcome to the new year. Happy New Year to you and your listeners. Look, it is really a case that, yes, we are paying more for certain essential goods for various different reasons. So it's not just a figment of anyone's imagination. It's showing up in the figures that are coming through, and those official figures that came through earlier in the week. The 1.3% for the 3 months translated to about 3.5% for the year across the basket of goods the ABS calculate. So a big increase, a very large increase.
Talking there, are you about the Consumer Price Index and its rise of 1.3%? Is the government or the Bureau of Statistics telling porkies, though? Because it doesn't feel like things have gone up by 1.3%.
No. I mean, basically what they're talking about there, the ABS has been tasked by the government to actually measure the costs of living in Australia. They do it via a representative basket of goods and services. And now all of those goods and services, they can't have everything everyone has, or you primarily compared to myself or to someone else. So some people spend a lot more on different items that might be going up a lot more, and others spend money on other things that aren't going up as much as well. But on average, the increase in that basket of goods over the last 12 months has been about 3.5%. That's a big increase. The Reserve Bank is aiming for an increase in inflation of between 2 and 3%. And so this is well above their target there as well.
We'd better just get a sound understanding of our terminology here, because if we're talking about a rise in the cost of living, is that what economists call inflation? Is the CPI the same thing as the rate of inflation, Phil?
The CPI is basically a figure that the ABS produces, a consumer price index, a representative basket of goods and services that the average person in Australia would be consuming, and that's their measure of inflation. So when economists talk about inflation, they need some benchmark to work off, and the CPI in Australia is the official figure that the ABS puts together for the government to let all of us measure what inflation is in the economy.
So seeing as there has been an increase, what's driving it, Phil?
Look, it's probably, there's lots of different things in there, but the major increases in the CPI for the December quarter were fuel, as you were talking about before, and that went up 6.6%, which is a very large increase, and the cost of new housing. Now, both of those, a big part of those increases is due to COVID-related supply issues. It's very difficult to find tradies. It's very difficult to get cement and bricks and timber and all the rest of it because of all of the pandemic issues in Australia and offshore. So a lot of this inflation is imported from overseas as well, because some of the goods and services we're trying to get here and the strong demand in the economy is leading to higher prices, and that's flowing through into these official figures that we're seeing. So a big chunk of what's going on is the COVID-related supply issues, but also the strong demand by the government and the Reserve Bank cutting interest rates really heavily, and the government pumping a lot of money into the economy to get everything sort of going again. So you've got strong demand and constraints on the supply side as well.
We heard from Elizabeth earlier, who couldn't believe the price of a cabbage. How do we explain that?
Well, case in point there. There's not a case of there's less cabbages around, so to speak, or to a certain extent in the shops there is, because there's not as many pickers around. There's not as many overseas students in Australia because of the COVID restrictions to actually harvest the goods. You talk to a lot of farmers, they've got no farm hands to take all their harvest off at the level that to meet that demand. And then you've got the surging price of fuel, which is leading to higher energy costs, transportation costs, which flows through into the cost of getting those perishable goods to market in time for demand from people like your listeners, and the result is higher prices.
Phil McGann with you from Claritude Financial Planning on ABC Radio Brisbane in Queensland, where it's 5 minutes to 3. My name is Kat Feeney. We're talking about inflation this afternoon. What does this mean for you and the bills you pay? Elizabeth also made the very good point, Phil, that if you're on a fixed income, absorbing the rising prices of things can be quite challenging if that income doesn't also rise
up.
Yeah.
Look, it's very difficult. And what you're finding is that built into, say, the age pension that a lot of people are on, the way they set the age pension, there is a CPI adjusted figure in there. So they actually increase it every twice a year to basically reflect the cost of the rising cost of living. But that CPI figure may not reflect exactly what the age pensioners are spending their money on. Case in point, healthcare is a lot more expensive, well above the 3.5%. Talk to any of your listeners about healthcare costs, and it's not rising at 3.5%. It's probably rising at 5 or 6%. But if the CPI figure baked into the pension increases is only at 3.5%, well, you're always going to be behind the eight ball, so to speak. So that's a big issue, and that's more of a definitional issue of how the government sets pension rates for fixed income earners. And if that should be adjusted, well, that's a political issue on that side. And that's been a lot of people for a long time have been calling for a change in the way that's calculated out. That would flow through to better levels of income for people on fixed income anyway.
Yeah, it would also account for a larger spend of the government's budget. So it's a big issue.
There's no free lunches.
That's it.
It's a hard thing to get exactly right. And this is why inflation is such a big, important thing. We haven't had a big issue with inflation in Australia for 15 years. It hasn't been as big an issue as any of your listeners who've been around back in the 70s and late 70s, early 80s. Inflation was a very big issue. And to a certain extent, it's been curbed over the last 10 to 15 years for various economic reasons. But at the moment, we're seeing it pop its head up again. Is this an issue of COVID-related supply issues, and will this resolve itself over the next couple of quarters? We'll know more when the Reserve Bank meets next week to see what they say, and highly likely that they'll flag that they may have to increase interest rates to curb some of this activity in the economy, which is leading to some of this inflation. So it flows through to everything. So inflation isn't a very good thing at all. You need some inflation in an economy, but you don't want too much.
We're a few minutes away from the latest news, Phil. With all of that in mind and leaving macro and microeconomic policy to one side, is there anything that you can do as a household to protect yourself from some of the pressures you've been talking about this afternoon?
Look, it's very difficult on a fixed income to do that. If you're not on a fixed income, or if you're earning a living and you're trying to make sure your wages are increasing above those levels, well, that's something you need to try and do. But when you're on the investment side of things, making sure you invest in term deposits are probably going to rise. Inflation-adjusted bonds are probably more attractive than this normal, and maybe looking at companies that will give you or have the ability to pass on the cost rises in their onto their customers as well. But the average person out there, it's pretty difficult when things are rising at the petrol bowser and at the food store to do much about it, particularly if you're on a fixed income. So there's no easy solutions there on that front, I'm afraid.
All right, noting, of course, that it is an election year. I'm thinking this isn't the last we're going to hear about cost of living. Phil, thank you for your time this afternoon.
That's okay, Kat. Thanks very much. Nice to speak with you again.
Phil McGann on ABC Brisbane and Queensland with Claritude Financial Planning.
On your radio and online.
At home or on the road.
This is ABC Radio.